is back with us, and Ms. Kant is also with us. Ritu, go on.
I just wanted to understand the government shareholding would fall post the merger. Currently, it's about 62%. Am I correct? It will come down by 0.6 to 0.7%. Could you confirm that?
No, it will come down by about 48 basis points. It will come down from 60.18 to 59.70.
To 59.70. Also, ma'am, as my colleague Surbhi was asking you earlier, the associate banks are in the process of cleaning up their books. Some of them are worse than the others. By when do you expect to sort of, harmonize the levels with State Bank of India? And what will the combined picture look like if you're targeting March? By the end of the fiscal, what is the kind of asset quality picture that the combined bank would have?
Ritu, it is hard for me to answer that as of now. You know, we have given a guidance, a broad guidance, when we declared our March results for SBI alone. And like I just shared earlier with Prashant, we do hope to align the asset qualities broadly. Again, you know, it's difficult to do it for very small value accounts. But broadly, we hope to align our asset quality by September of this quarter.
And what is the kind of branch optimization you'd be looking at? There are several areas where there might be overlaps. What is your strategy on that front?
So, Ritu, I know I'm on air, but I just answered that question to Prashant.
All right. My apologies. I wasn't on air. Ma'am, also, what about State Bank of Patiala and State Bank of Hyderabad? They're 100% owned subsidiaries, correct? So,
That's right.
Post the merger, could you throw some more light on what that would look like?
So, you know, there is little to say on that. It will be it will be a merger, full-blown merger. Yes, that's what will happen. It will be a, line-by-line merger.
All right, ma'am. Also, you target to complete this by March 2017 is what you said. What are the approvals that will be pending now once your board approves it and the associate bank boards approve it? Would you need RBI, government, or any other approvals that are still pending?
Yes, we would need Reserve Bank of India and Government of India approval, and thereafter, 30 days after that, would be the record date. It will go to Government of India through Reserve Bank of India.
Could you share the timeline by when you're expecting these to come in, by when the associate banks are expected to come back with their board approval?
No, that is happening as of now.
Would it be out today itself, ma'am, the board approvals from all of the 5 associate banks?
Yes.
And 30 days from now, you said you...
No. Then you apply to Reserve Bank of India. Reserve Bank of India, once they clear it, they'll send it on to Government of India.
All
and
right.
Once the Government of India approves, then we will await their approval. Yeah.
Ms. Kant, just a quick final word. Once again, just going back to the asset quality point, while we understand that you mentioned that the next quarter will probably see a little more cleaning up of the associate banks' balance sheets. If you could leave us, ma'am, with some sort of a guidance at least, where would you like to see the asset quality of the combined merged entity stabilize, perhaps by the end of the fiscal? I'm not asking for a 1 quarter or 2 quarter sort of numerical guidance.
I think, we'll be better positioned to tell you that when we come back to you with our second quarter results, and their results are out as well. It's very difficult, but broadly the point is that we have given a guidance for our own asset quality, and we are the biggest chunk of it.
Sure.
It's hard for me to say at this point for March where the combined entity asset quality will look like.
Sure, but when we're talking about the associates, are we expecting significant, deterioration, significant slippages in the September quarter, or are we talking about only sort of some minor moves here and there? Because I'm guessing most of the associates have a huge retail franchise as well, and they're not only looking at perhaps corporate exposure where there could be more pain.
No, we are looking at the corporate exposure, and the higher value accounts, and that is what we have, actually taken on in the first quarter, and that exercise will get completed in the second quarter.
Ma'am, thank you very much for patiently answering all those questions, and thank you indeed. Appreciate you joining us with that perspective. So, that's the big story which has been breaking, and we've spoken with the SBI management extensively. The merger of the 5 associate bank subsidiaries with State Bank of India announced. The merger ratios are all on your screen. The SBI management essentially telling us the logic behind the merger. She's essentially said it's based on book value, asset quality, financial strength, fixed assets, for example, it's going to be so a variety of parameters have been obviously taken into consideration while arriving at these swap ratios. Of course, tomorrow when the market opens, immediately you will have in a way pricing which will be corrected, and we'll put those up for you in a bit as well. Compared to the current market price, what does this imply? Is there any mispricing which the market will correct? So one would obviously assume that given the franchise strength, etc., the subsidiaries would have been, and I don't want to say shortchanged, but if anything, they would have, there would be a difference in valuation there. So that will get corrected. I mean, but that's in the natural course of things. But I think, this is bigger than that. This is bigger than tomorrow. It's a slightly medium to longer term. I think that should be the focus.
So I just want to quickly point out here, because Varinder and the team has already done a very quick number crunching exercise for us. Simply multiplying, the sort of prices, the current market prices, the closing price today, as with the swap ratios that have been announced. And what emerges is that shareholders for SBM, State Bank of Mysore, are unlikely to be very pleased, because you do the simple math and they might end up feeling a little shortchanged if you're looking at the current market price, the current today's closing price. It seems to be fairly evenly poised for shareholders of State Bank of Bikaner in Jaipur, because there the differential is minor, and it's actually slightly on the higher side if you're taking the value of 28 SBI shares. And again, it's fairly evenly poised for State Bank of Mysore shareholders as well. But some pain might be coming SBM's way. That's where the numbers seem to be stacking up right now. But we still have Mr. Parekh with us on the line. So, sir, some thoughts from you as well. Of course, it's interesting how, the swap ratio announcement has been timed, and the lady from State Bank of India herself was alluding to it, because the swap ratio wasn't announced back when the board approvals came in. And we've had a substantial run-up in the share prices since then, and the ratio's been announced today. So how do you think this will be digested by the market?
Well, first thing is that, a large part of the subsidiary shareholding, in some cases it's almost 100%, it's a mere a merger activity. In the sense there are no shareholders who can really react, with the exception of the government itself. Because in some form or the other, the State Bank of India shareholders can only perhaps sort of look at whether they are, from the swap ratio point of view, fair or benefiting. The government of India wouldn't really worry about whether it's benefiting or otherwise. They would look at the fairness, in terms of the swap ratios. Considering also that all these factors, including the quality of assets, fixed asset valuation including, all these things have been considered. I would assume in some form or the other that the fairness of swap ratios will be there. Now, what may happen, and this is one thing that crosses my mind, we're going to have IFRS, we're going to have Ind AS. Fair valuation in the balance sheets will have to be reported as of September in any case. So independently, most of the banks, not just State Bank of India, the entire banking system based on the RBI guidelines is following, let's say, so fair valuation of all assets is something that's going on at this point in time in the banking system. After a quarter or 2 quarters, when the fair valuation of subsidiary organizations as well as SBI is announced, that is Ind AS impact, then automatically we will try and understand, what has been the implication of this merger in terms of who's really benefited in terms of shareholder value. But by and large, I would assume that the teams that would have done the due diligence, the valuers, would have taken that into consideration.
It's an important point, Surabhi, and I think we should put these graphics in terms of what the current shareholding is. Maybe we already have it on the air. So State Bank of Bikaner and Jaipur, 75% owned by SBI. Bikaner and Jaipur. Mysore, 90% owned by State Bank of India. Travancore, 79% owned by State Bank of India. Hyderabad and Patiala, 100% owned by SBI. So, it's basically, as Mr. Parekh pointed out, it's government to government in that sense. So there would be minor differences. They always will be there. But this is, in a way, bigger than that. Mr. Parekh, in terms of I did ask the SBI person earlier about the cost benefit. There is an immediate cost, mostly HR related, and there are synergy benefits as well. They estimate costs of about 3,000 crores, benefits of about 3,500 crores. That's immediate, which you can calculate. How would you look at that? And from a bank perspective, from SBI bank shareholder perspective, how would you view it?
Well, actually, you see, this will be the guiding point, for mergers in the public sector banking as we go along. Perhaps the ratios that will now get established after this merger, whether it is business per employee, business per branch, all productivity indicators as well, will be considered now, and they'll be sharply evaluated, by not only the shareholders and the analysts, but by, in fact, the government and also, let's say, the stakeholders in the entire system. The reason is something of this sort will then be expected from the other mergers as well. So that's the first important point that we have to observe. There will be cost efficiency. There will also be a substantial order of reorientation, cost. Because if the employees, 72,000 employees, have to be absorbed in the main bank, and some reorientation has to be carried out of both existing SBI staff as well as, so that the entire organization works with an integrated kind of an approach. Then, of course...
Right. Mr. Parekh, just one point. The first point that you made, that this would be a signal, you meant a general other PSU bank consolidation, signal for that?
Yes. See, basically what may happen is, if BBB were to, the Bank of the Bureau of Bank Boards, if it were to look at, let's say, the possible mergers between the other banking companies, then perhaps the new set of ratios, productivity ratios and efficiency ratios, which may arise out of, which are planned to begin with, and then they may arise. So, one of the things that we heard just now when SBI person did indicate that they are looking at, let's say, the uniform asset quality across the merged entity. So all the entities will follow more or less the same approach to recognizing, let's say, what is recoverable in the loan book. Now, if these norms are applied across, then certainly we may expect cost reduction, we may expect efficiency, we may expect even better recovery, in case of NPAs. And so those things will start getting the sense. I thought somewhere along it's important, Prashant, that, the main shareholder keeps a track of what it is, and then see whether the planned efficiency was achieved or not. Otherwise, after 2 or 3 quarters, we may just come back and we may say, oh, we didn't really look at those, or we didn't really look at the productivity in terms of what it ought to be and what we're getting now.
So, Mr. Parekh, a very basic question, really, from a layman point of view. The traditional book value method of sort of looking at banks and evaluating them, perhaps that's been diluted in terms of its importance now, given that the book itself has deteriorated so significantly in the last couple of years. So most banks, most PSU banks. So in this valuation exercise, and there were 8 independent valuers that were appointed, what do you think would have been some of the most important takeaways, some of the most important sort of factors or criteria, so to speak, to arrive at the valuation? I just want to recap for the benefit of our viewers, just to quickly go over. Very favorable for State Bank of Travancore's shareholders, fairly all right for State Bank of Bikaner and Jaipur's shareholders, but not so good if you're judging by the closing price today for State Bank of Mysore's shareholders, purely doing the math on the swap ratio.
Yeah. See, that's a very, very, very good question. I suppose, there's a book value, or the face value, it's normally called. Book value is only one of the inputs, for valuation of an entity. It's only one. Increasingly, its significance will keep on reducing. And let me articulate my point. You see, the current accounting requires you to book all your assets at either cost or market value, whichever is lower. The fair value principle moves away from that. It recognizes the fair value, irrespective of whether it is more or less than the cost. So to that extent, I would say we will certainly see, not just in case of State Bank of India, but when, let's say, the Ind AS or IFRS, let's say, numbers will start coming up, we'll know fair valuation of equity, fair valuation of even the books, fixed assets and the loan books, and investments as well. So, to that extent, I should say, that book value is only one of the inputs. But when you do the due diligence and then you start applying fair valuation to your investments, to your fixed assets, and to your loan book, then some differences will emerge, and those have to be recognized in the swap ratio as well.
Okay. Let me come into this conversation a bit late in the chat itself, but surely you all covered this, that SBM, for instance, it looks like they've lost by about 12%. Now, it is in SBM that State Bank of India has the maximum stakeholding, 90%. So really, who is the winner and who is the loser? 90% is anyway SBI, even if you're going to say that SBI is losing most or SBM is losing. Even if SBM is losing most, that is 90% SBI.
It's
so
from one pocket to the other pocket. I mean, essentially.
So it's not really a very big loss.
No, that's the point.
As well, if you say gain for SBT, it's again 80% owned by SBI. It's only in SBBJ that it is 75%. But over there, it's nearest to the market cap. And in any case, SBI has a better idea of the quality of the book of all these subsidiaries than any one of us.
Lata, one more
because
point
they're anyway in the board.
Absolutely. One more point which she made is, I think she said that 16th of May is when they first announced it.
Yeah.
And she said that for the purpose of valuation, Surabhi, they've used 16th of May.
Exactly.
Yeah.
I'm not sure if...
And that is why there is this difference.
There is this divergence or difference, I mean, essentially. But even then, even with this difference, as you say, because SBI is such a dominant shareholder in most of these subsidiaries, I mean, the impacted party is SBI, I mean, at the end of the day.
Yeah,
And
absolutely.
as well, my sense is that wherever you may see a bit of a discrepancy in value from the current day, and it may look like it's perhaps a bank that has lost a bit, or shareholders lost a bit, it's quite possible that they have read something about the book. And if you know the second quarter results, as I'm sure they know, and Mrs. Bhattacharya was on record on the day she announced her numbers, that there will be one more quarter of pain for the SBI subsidiary to bring them to the same level of asset quality review that SBI has gone through. If that is true, then probably we will see some of these corrections come through in the second quarter. So they are probably privy to the book much better than any one of us. So even if we squabble about a 1% here and a 1% there, they probably have a better idea of the math.
Absolutely. I think that's the basic important point here. So but it's a big deal, I mean, in terms of consolidating the behemoth, right? I mean, just one large entity. Also, subsidiaries have about 5% of the market, just about 5% of the market. 4 lakh crore is the book size. I mean, SBI is, of course, far larger. So
14 lakh crore.
It does add
So it
heft,
actually adds 20% to the 15 to 20% to the
of
number
the SBI size to itself, yes.
because of the coming together of the subsidiary. So it just becomes a larger behemoth. Though we've always said that SBI is 25% of the banking system, and that continues. But whatever synergies they get is going to be over a 2-year period, is what Mrs. Bhattacharya said. Mr. Parekh, would you think that now in the quarters to come, in the next 8 quarters, we are going to see SBI, the behemoth, better able to synergize and, mine the benefits of the merger?
They should be. I mean, basically what seems to have happened is now from, whatever announcement that I'm reading now, that the fine print and the framework has already been created. I suppose May 16th onwards, everything, is well worked out, looks like. Now, the only worry that I have, and I don't know, maybe it may be ill-placed, but is that, let's say, if there is a change in the leadership, and if the new leader at the SBI were to take a little more closer or a harder look at the loan book, for instance, or otherwise, then what may happen is something that remains to be seen, Lata.
So that's exactly the point I was coming to, sir. As we just heard the SBI, spokesperson there say that they can only give us a very clear asset quality guidance for the combined entity a quarter down the line. So we don't know what the gross NPAs will look like for the merged entity right now. In absence of that information, what else is the biggest benefit or the best takeaway for State Bank of India with this merger?
Well, if you ask me, I've always believed, I've worked in 5 different jurisdictions, 5 countries earlier. I've always believed that for financial institutions, size does matter. The larger, and particularly it matters where you have economic performance volatility. If the economy, goes through the kind of ups and downs or pains that we've seen, in fact, in the last decade, and particularly in the last 5 years, then I suppose the larger the balance sheet of the bank, the more it is able to really withstand, the economic or the external factor sort of influences. And this should help. It's really a big deal, as you rightly said.
I was also going through the numbers of SBM and SBT. State Bank of Mysore saw a smaller jump in its NPLs. It has jumped from 6.5% to 7.8%. in the quarter, 6.56 to 7.8. Whereas in the case of SBT, it jumped from 4.5 to I think 9%.
9.3%.
Yeah, so it's possible that SBT has better recognized, and maybe there is something more to come in SBM. I mean, we are just guessing from the trend, and perhaps that also explains why there's a bit of a negativity for the SBM share swap. As seen from yesterday's market cap. We must also remember that today the shares ran up, so that also would have distorted the numbers a bit. But Mr. Parekh, is that a fair way of looking at it? SBT saw almost a doubling of NPLs. I think it was an 80% rise in NPAs. And in percentage terms, from 4.5%, I think it went to something like 8%. So, you know, perhaps the bad news is more in the price, and SBM, you couldn't give the value of today's share, probably because it will run down more.
Lata, just a sort of thought here. I mean, we've consistently heard the SBI management, when you ask them what's in it for them, we've consistently heard the commentary about lesser sort of competition for the same business, because they go on to say that some of the associates were competing within the same jurisdiction for the same sort of, you know, lending, particularly on the retail side of the book. With that gone, will it be a significant advantage for the merged, behemoth?
I don't think SBI got great competition from its subsidiaries. Clearly, the competition came from outside banks. I'm sure ICICI and HDFC Bank and everybody else who have very big CASA franchises, current and savings account and salary account franchises, are as much of competition. And on the loan front, the market itself is a big competitor today. Market is giving everything in debentures, which is 25, 50 basis points lower than what banks are giving as loans. So I don't know whether competition is mixed so much. That may be more limited.
The minor competition.
It will be
that
more,
they were
you know,
facing
you
from their
can
own
close down
subsidiaries.
some branches, you can open them in other areas, because you may have duplication of branches in several places. So that way you will be saving a lot in terms of costs.
Which, interestingly, Ms. Kant, when she was speaking to us just a while back, actually went on record to say that we shouldn't see this as a branch closure exercise. It's more of a branch rationalization, because we'll move it, we'll change location. We're not looking at, you know, sort of knee-jerk closures. I
think that's the message which all SBI top brass want to give.
Just in case the employees are listening.
Yes, and it's
an important, because
it's not to be
or the largest shareholder.
It's not to be scoffed away, because there are multiple
unions which are still
political opposition. It's, almost every state, Telangana state says that SBI identity should be retained. That was day before yesterday. The state of Kerala said that SBT's identity, Travancore, should be retained. So there will be opposition, and this could foment trouble from the workers. So it's very important that SBI does not want to create more problems than it already has when it synergizes. But equally, I think labor force is needed as well. I mean, all banks, and much more so SBI, have lost a large middle in the last many years because of slower recruitment. So I'm sure they will be able to put all their employees to good use.
If one were to look at it and ask, what is the dominating reason, the basic reason to actually do this? I'm going to go back. I mean, this has been there for a while now, but what is the primary reason, motivation to actually do it? I mean, at least I can't put my finger to it and say, okay, this is why this should have been.
So I actually want to bring in Mr. Parekh on that note as well, because that's the question we just put to him a while back, and he said that size does matter. But Mr. Parekh, if you could come into this conversation.
The point should be that size for SBI is never been a problem.
Huge. Exactly. It's anyway huge.
It's the largest bank, so it's never been a problem. So
no, it's a problem for the babies. Actually, for the subsidiaries. You know, there was this huge argument in favor of consolidation, because all the public sector banks are basically offering the same service. So why did the Union of India have 21 banks, state-owned banks? It could well have done with maybe 3 or 4 with some regional specialization or, different leadership. The consolidation would have been done now, driven by the Bank Boards Bureau, because they all see the pointlessness of, so many DENAs and IOBs and BOIs and Indian banks. Probably there was need only for 3 or 4 banks.
No, so what you're saying is maybe the babies, the subsidiaries were in a worse off position as compared to some of the private banks.
There was no reason to exist.
In the first place.
Yes.
So,
no, maybe it was at a time when, the local language was very important. But now you are able to manage that even with a centrally run bank. So, that the level of computerization and the level of digitization is so much that, the reason for a regional bank probably has vanished much more these days. the logic for consolidation was there even in the non-SBI banks.
Sure.
And therefore, there you are not able to consolidate because, as Vinod Rai told us last week when I interviewed him, he said that, at a time when bank chairmen and managing directors have to concentrate on the bad loan problem, asset quality problem, you don't want to load them with a consolidation problem.
Exactly.
Where, a Dena has to manage an IOB rank
With a
adjustment.
18%
and
GNPA.
Exactly. You don't want them to divide their attention. But for SBI, that is less of a problem. It is, first of all, they have
But
probably
coming
passed the
back to
hump.
Prashant's main question, we totally get your point about this being good news for the babies, this being good news for smaller banks that have not had the wherewithal to really compete with their own parent in that sense. But what's in it for State Bank of India?
Well, I guess there is always more, that many more branches, that much more size if you're 20% of the banking system to 25% of the banking system, it matters. But I wouldn't be surprised if the SBI top brass went in for this consolidation simply because they don't want to be saddled with one of those IOBs or something which may be thrown into their basket. No, we are consolidating. Don't give us
That
any
is
more.
the most convincing argument.
I think that's a very solid argument.
Mr. Parekh, your take. I mean, what was the compelling reason for consolidation now?
See, basically, I mean, the babies have to be fed. I mean, that's the point you're trying to make. Now, you see, I mean, particularly when it will come to, let's say, capital for the subsidiaries, and that becomes a serious note. I mean, SBI itself has to now, I mean, compared to what it used to be 5 years ago, really plan its capital, because the capital from the government that's forthcoming, isn't in keeping with the size of growth of the book or size of the growth of the economy. So to that extent, I mean, I would certainly say that the consolidated entity has a much better chance. I was actually alluding earlier, before you came in, to the BBB factor. What may now happen is, and this is something that going forward, I suppose BBB should be more careful and SBI also should be more careful. See, the so-called, talked about efficiency and productivity elements. If we really do a little more, I mean, we can do a bit of planning in business numbers. But I suppose if we do a proper planning of the productivity numbers or ratios or factors and keep a close eye on that, because, I mean, it should really finally result in, the sum of total adding up to more than, the individual numbers themselves. Unless that happens, merger per se may remain a very theoretical subject to talk about. So that was one quick observation that I was trying to make from
Fair
out
point.
of this.
I mean, I guess all mergers will have to be more than 1 + 1 = 2. It should yield at
Otherwise,
least
why
3.
do it?
Otherwise,
Otherwise, why do it? So, I mean, right now, today itself, not only should we have, perhaps, as an economy, because, I mean, the Indian government is the largest shareholder of these entities. What kind of planned efficiency and productivity factors should emerge, in the next few quarters, including the quality of the assets, perhaps. Because if we agree to a simple point, saying that, look, earlier on account of joint lending forum, you had too many lenders sitting on one particular large account, and they wouldn't reach an agreement or come to a proper conclusion. Now, with less entities, you can have a better chance, basically. So maybe we should make a note of these things, I suppose.
fair point. Parekh, thank you very much for joining us. So the big merger news and the swap ratios are out, and it does look like more or less it's on expected lines. Where there are minor discrepancies, I would assume it's because there perhaps are some more bad loans yet to be recognized, and that is why perhaps there is a little bit of a discrepancy. Just informed guesswork. SBT, for instance, rose from 6.5% to 7.8%, the bad loan, whereas in SBM, the rise was, in SBT, the rise was very significant, from 4.5% to 9.8%. So it more than doubled, whereas in SBM, it rose from 6.5% to 7.5%. So maybe there a little more of discounting is given. Perhaps there is a little more to recognize. That could be one of the reasons. But this definitely creates a huge behemoth for the Indian banking sector. That's the big takeaway.
Absolutely. Thank you very much, Lata, for that perspective. That's a wrap on this edition of Markets Today.